Kristin DeClark, it is so wonderful to have you Global Head of Technology Investment Banking at Barclays. What a conference so far. End of the year, you've got some really big players here. What have sort of been the topics?
Yeah, so first of all, thank you for being here at our conference. We have 160 corporates, we have over 1,000 attendees. I would say the two biggest themes coming into our second day at the conference are, one, no surprise, AI, and that's both at the enterprise level and also at the consumer application level. And the second big theme is investors really trying to figure out what are the primary goals of the next administration and how does that play for technology?
We got a big signal this morning. It was early on the West Coast, but I mean, I'm sure a lot of people here were glued to their screens seeing President-elect Trump at the New York Stock Exchange. I mean, I think he was the first president-elect at a stock exchange talking very positively about the economy, about markets, his expectations. What are you hearing from attendees, and what are you at Barclays preparing for the next administration?
I think the biggest things that investors are focused on at the new administration are, is there going to be a more relaxed regulatory environment? If that's the case, that could lead to much more active M&A calendar. The deal-making environment should absolutely increase. The second piece relates to investment in things like national security, defense-type technology investments. Also, I guess, AI. So if there is less regulation, what does that mean for innovation around AI?
When you think about, a friendlier deal environment, we've already got new people or new nominees at the FTC and DOJ. Big tech has been a big question, right? And is it clear to you that big tech might have an easier environment, or are you looking to more smaller mid-cap deals?
I think it's both. I think based on the conversations we're having right now with our clients, there are $50 billion plus type deals that we're kind of accelerating those conversations over the last couple of months. But it's also going to have implications potentially for smaller and mid-cap deals, both venture-backed and on the private equity side.
$50 billion plus deals, those are big. We haven't seen very many of those in the last few years. Would that be big tech looking to do that? Because they've got the balance sheets for it. Who else?
Combination of big tech, I think primarily big tech doing those deals. The question is timing, and obviously I think the expectation is if it is a regulatory environment that's more favorable to an M&A environment, then yes, we could see that.
Big tech have sort of found creative ways of doing deals. We like to call them take-unders, with Microsoft and Inflection. You had Google, bringing back Character AI's founder into the fold, basically acquiring the talent and licensing, but leaving the companies themselves. Do you expect that to change in the next administration? Maybe see them be more aggressive when it comes to AI? Or do you think that AI is still sort of a delicate place because it's such an emerging technology?
I think we'll continue to see acqui-hire type M&A transactions, but I think the other piece that we're hearing is probably more kind of carve-out type deals happening. So carve-outs of either large cap businesses or breaking up a business and selling one piece of it to a sponsor, one piece to a strategic.
Got it. We saw a big IPO this morning. What's your outlook for the IPO market next year?
So for the last couple of years, we've all kind of expected that there should be a boom in the IPO market. Right. In December, we're looking into the first part of the year thinking about things picking up in a meaningful way. I do finally feel like we are at that inflection point. We've had 2 great years of 20+ returns in the equity market more broadly. We had an increase in IPOs in 2024, so we went from 3 in 2023 to now 8 tech IPOs in 2024 in the US. My expectation is that in the first half of 2025, we could see 10+ tech IPOs, and I think that will really help open up the environment. Also, the performance has been fantastic. So if you look at tech IPOs this year, trading up on average north of 80% versus a broad market up 20% plus.
What kind of IPOs do you think we're going to see? We like to say we'll see, they're not necessarily the IPOs we want, not the OpenAIs, the Databricks, the really big unicorns that are so easily able to raise money in the private markets. Who will we see go out?
Look, I think it's going to be a mix of venture-backed companies and private equity-backed companies. There's a real need for private equity firms to start to monetize some of their investments, and an IPO is a nice way to really start to get the puck on the ice for a monetization standpoint, to kind of go back to their LPs and show that they're providing liquidity.
Right, so that's the deal environment. Let's talk a little bit about some of the M&A topics that are hot right now. Certainly what we've seen, our reporting is this question of whether AI progress in the actual LLMs, large language models themselves, are maybe plateauing or losing a little bit of momentum. What are you hearing with regards to that trend?
Look, I think the biggest focus on AI recently has been on AI agents, and we're seeing that on the consumer side in particular. So as it relates to improving the consumer experience with the use of AI, that's happening in vertical applications, so online travel, online learning, online dating, et cetera. On the enterprise side, the biggest application of AI is really on improving margin. So it's efficiencies, improving margin, and I think that will persist.
Do we finally see that next year? I mean, because I feel like we've been talking about this for a long time. AI is going to improve efficiency margins, but we haven't really seen the return on investment.
We're starting to see it. So we're starting to see, I mean, in some of the companies that are here with us this week in the conference, margins moving from 55% to 80%.
Wow.
Driven by efficiencies created through AI. The question is, when do we actually start to see that accelerate growth? And we haven't really seen that yet, but that's probably the next leg, and that's over the next couple of years.
Over the next couple of years?
Yeah.
Do we start to see it next year?
Hopefully. I mean, hopefully we'll start to see it in some areas. It's hard to really move large cap tech in a meaningful way from a growth standpoint, but I think some of the smaller or mid cap tech, yes.
There's been a lot of news on Google this week, and it's been sort of plagued by this worries about the regulatory scrutiny, about its innovators' dilemma, but we've seen, a big breakthrough in quantum computing this week. Waymo seems to be firing on all cylinders. The new Gemini models that were out yesterday. Where are you sort of on the search business, and specifically like an innovator's dilemma? What happens to search in this generative AI environment?
Well, I think some of the AI agents, right? So a natural extension of search is moving from search to action or transaction. And so instead of typing into Google, what are the best Italian restaurants in San Francisco, you can type in, book me a reservation at one of the best Italian restaurants in San Francisco. And that's a natural extension from search to action transaction.
Okay, got it. You also mentioned defense tech. There's a lot of defense tech companies here at the conference this year. What do you think that means going forward? Why has that changed? It used to be an area that was too difficult, too slow for anyone to want to touch, really, in the venture community.
Yeah, look, I think that it's one of the two most obvious areas that the government could make investments in technology. And it's a tough sales cycle. It's a long sales cycle, and the government's a tough customer, but we've seen willingness, I think, and an expectation of increased willingness to adopt new technologies. National security is probably the most obvious place, and that's for the defense, the defense tech industry. The second place is any areas where government can use technology to improve efficiencies in the same way that corporates are using it at the enterprise level.
Right. Well, it will be an exciting year ahead. Thank you for your insights. We'll look out for all the things you identified.
Great. Thank you so much, Deirdre.
Thanks, Kristin.